All right, hello everybody. Welcome back to episode 2 of Trading with your boy. Uh, Last week y'all just fucking roasted the shit out of me for not having good audio. I just wanted to make it sound like one of those podcasts with like the slow, sultry voice, ASMR talking into your ear. But I guess not. I guess not. Y'all want to hear me scream. Anyways, we're gonna talk about last week's trade, see how it went. Talk about price action, talk about fees, and then we're gonna move on to some news. The ETF, the CFTC. We're gonna talk about Libra, Greyscale, and something called Lycee. Then we're gonna talk about some feedback. You guys talk to me about like stop losses and stuff. We'll try to cover that. So as you can see, I left the trade open basically all last week. Fees on Deribit is so much better than BitMEX. I mean, that's probably the main reason why I use Deribit instead of BitMEX for this series, just because I didn't want to end up paying like the ridiculous amount of fees. But as you can see here, the equity on the whole portfolio is about 1.2%. Hey, I mean, it's not like incredible amount of money, but it's not too bad. It's following exactly what I talked about last week, like the methodology that I wanted to use, the slow and steady, just following trends. And that kind of thing only works if you don't have like ridiculous fees, overnight fees, and 8-hour funding for the exchanges, right? So again, if you're not using the right exchange or whatever, like the whole thing might not work for you. But luckily there are more and more exchanges these days offering these products with low fees, so you don't have to go to BitMEX and pay Arthur so much money. P&L here says plus 50%. I need you to realize that this is 50% based on the 100x margin that we use, not based on like the whole equity, but like the actual margin that we use, which is nothing. When you're trading when you're trading 0.3 BTC, the initial margin is like nothing. Here it is 0.003 BTC. Like again, according to me, if every Bitcoin is worth like 10 grand, this is like $30, right? So it's nothing. So let's talk about price action last week. Immediately after like I made that video, right here. I made that video right here, right, on the 8th of August, and immediately after, something happened, right? BTC blew up like $500, right? The very next day. And this was a great example, like to explain exactly what I've been talking about. Like if you were trading 10x margin, 25x margin, this short trade would have gotten you liquidated, or at least it would have cut down your portfolio by a serious amount. But because we were only using 3x margin for the whole portfolio, this 5% move amounted to a loss of about 15%, which if you have any kind of balls, right, you can withstand a 15% loss, right? It's nothing in this space. No big deal, right? And that's exactly what I did. In fact, I considered adding more margin at the top there at around 8,600, but but I didn't, because there was no reason to, right? I also said that, like, last week, that this range here is probably like a good place for pumps or dumps. No one's for sure. I mean, that's good support, so it could pump from there, it could dump from there, but I went short because we're following trends, and the trend that I'm following is just basic moving averages. No big deal, not some like advanced TA or whatever. And the reason why I didn't cut the trade was because even though it pumped $500, it was still below the moving averages that I care about. That's, by the way, why the candles are red here instead of being red and green. The reason why they're all red from this short signal here is because the whole thing was trading under like all the moving averages that I care about. So I held the trade because it didn't break any it didn't break the rules why I entered the trade in the first place. And a week later, we're not in massive profit or anything, but we're still on the right side of the market, which is all I care about. Like, that's the whole methodology of this process. Now, going over to some news. Basically, like a ton of stuff happened last week. Probably the first thing was the ETF news. Bitwise tried, like, I don't even know how many times they've tried at this point to get a Bitcoin ETF going, and the SEC just doesn't want to have it, right? They don't care about ETFs. Like, why are they ever gonna let you get an ETF on a product that's like still making massive moves intraday like that? It's just not gonna work. And honestly, at this point, I don't even see why we need these ETFs. I mean, after BACT launched, and nothing happened, right? We didn't get massive pumps. It traded like 8 BTC the first day, like less volume than BitMEX does in an hour. It's like, why do we still care about ETFs and stuff? So I personally have given up on the ETF meme. Institutions don't care about this as much as retail does. So, like, why are we bothering with institutions? We should be bothering with retail. So let that go. Right, moving on to the CFTC. Now this is interesting because it's like the very opposite of what the SEC is doing, right? The SEC is all about trying to be safe and secure and being conservative, but the CFTC is just going the very opposite way, right? As you can see here, like they're talking about how Ethereum is considered a commodity by their standards, and they're perfectly fine, and they expect exchange traded products, ETPs, to someday get listed on the markets, and they're fine with airdrops and all this stuff too, right? So it's like, it's all about administration, right? Whoever is in charge of any of these agencies is going to be the person who sort of decides how all of this goes. So again, with time, we'll get our institutional markets and all that stuff, but again, why do we care that much, right? Bitcoin's doing just fine without them. Moving on to Libra. Mark Zuckerberg's shitcoin. Zuckerbucks had a terrible week. Basically, the political pressure came down real fast, right? They sent a bunch of letters to like some of the association members, and most of the heavy hitters pulled out, right? Stripe and MasterCard, All the big guys who anyone actually cares about, pulled out. Like, yeah, sure, a bunch of people stayed, Sapo and Coinbase and a bunch of associations, but like the big boys, PayPal and them, all pulled out. It's kind of interesting too, because like immediately after that happened, we got news that the rest of them have signed to stay on. They've actually signed to become part of the association, right? Basically, all this has done is made Facebook even stronger in their position with the association, right? If all the big boys are gone, then what's left is smaller to medium companies that don't have as much stake or strength in the payment processing industry. Like, what's left? But it's fine. These people have to understand why Satoshi decided to stay anonymous, right? And it wasn't because he doesn't like popularity or whatever. It's because people have tried to create electronic currencies before, right? And like everybody's favorite example is e-gold, and how that happened is basically the government came down, picked up the currency is like the state's biggest tool to control its subjects, its economy. All right, so they're not going to take it lightly when you just show up and try to remove that power. But some good news: Greyscale is reporting the highest amount of volume they've ever received, right? In the third quarter of 2019. Like, in the third quarter of 2019, they've received more investment than they've ever received since they started managing funds, right? And most people probably know who Greyscale are, right? If you ever traded GBTC, right? The G in GBTC stands for Greyscale. They manage something like $2 billion, massive company, right? And they're reporting that in this quarter they've received almost $300 million worth of investment, right? And they've been managing money since 2015, right? So it's like throughout that whole time, right now is when they've gotten like the biggest amount of interest to manage funds, right? So I'm not entirely sure where this money is coming from. My whole spiel about institutions not really caring, who knows if they actually care, but they're just not interested in ETFs. They want to buy the actual thing. Who knows? Or maybe this is just sort of the higher end of retail, right? It could just be a bunch of rich families in the Middle East buying into crypto through Greyscale. Finally, on the news section, let's talk about something called Lycy. So basically, like in 2016, someone launched an exchange called Lykke, right? Lykke. It's based in the Netherlands or something. And I thought it was a scam, right? I remember like going to the Bitcoin Talk announcement and be like, yo, what is this garbage? Like, how do you expect me to believe the CEO of one of the largest exchanges leaves his job to come and trade shitcoins, right? Like, what kind of scam are you trying to pull here? It's kind of funny because it turns out, they were serious, right? Like basically they launched this product on their exchange. It's a way to short the top shitcoins, right? The top altcoins. They bundle them all together into one, basically an ETF that you can short, right? I could tell you a lot more about this subject, but they're not paying me money or anything, so I don't care. Finally, let's talk about some feedback. Obviously, I appreciate all the people telling me that the volume was too low, that was kind of my fault. You know, I just felt like I wanted to do some kind of like aesthetic with the show, so I didn't want to be like, you know, screaming at people. But I appreciate the feedback. But one of the interesting feedbacks was someone talking to me about stop losses, right? I'm gonna put up a screenshot of the exchange we had, and he was asking why I didn't have a stop loss, right? And kind of insinuating that I'm just gonna, you know, wake up one morning and I've been liquidated, right? It's kind of funny, because this is one of like CT's, you know, biggest meme is the oh, you need to know exactly where you're gonna take profit and where your stop loss is gonna be, you know, right before you take a trade, or else, you know, you're just gambling, right? You don't know what it's like, you know, you shut up. You don't know what you're doing. There's multiple ways to skin a cat, right? And I was trying to explain to him that, you know, not only like is it not important to have a specific stop loss with this methodology, I'm probably like 95% of the time like close enough to a device that I could exit a trade if I wanted to, right? And you know, let me explain, right? So the main reason that I would exit a trade in a loss is if it closes the daily candle, or at least trades the daily candle above the 30-day moving average, right? The monthly moving average. That is the main reason why. And it's like there's no stop loss for that, right? I can't just go to, you know, Deribit and say, hey, make me a stop loss where, you know, if it closes, then my trade gets canceled, right? You know, there's no way to do that, right? The best you can do is check up on price every so often, you know, see what it's doing. You know, it's kind of micromanaging, but it's not really. Like if you look at the chart that I use, you know, it's obviously a proprietary chart. You know, I wrote the script myself, so, you know, I'll just look if it trades or closes above that moving average, I'll get a signal to exit, and that's exactly what I'll do, right? It's that simple. Thanks for watching. Leave some more feedback so I can respond to it next week. Like, subscribe, you know the spiel.